This podcast is brought to you by lineupmedia.fm.
Welcome to the Circuit of Success.
So you can tell
I'm
me
your
what your
host,
habits
Brett
are.
Gilliland.
I can
Today
tell you
I'm
what sort of
excited.
person
I've got
you are. I
Brad
can tell
King
you
here
what
with
your
me
future looks
co-hosting,
like.
and we've got Brian Estes on
But like
the,
I
on the
always
show.
say,
Brian, what's going
life
on
is
today?
10% what
How much
happens
to
to
try
you.
to keep
It's
up with the market,
90% what you
crazy.
do about it.
It's crazy times,
The
isn't it?
people who are most effective in the workplace
It is.
believe that their
Yeah.
future is going to be bigger than their past.
A
When
lot of
people
fear
don't
out there.
believe that their future
That's right.
is
So
going to be
we
bigger than
are
their past,
coming from
they begin to
O'Fallon,
disengage.
Illinois, which is where you were born and raised, but not born and raised. You're military. We're all over the place.
You're
but,
listening
went
to
high
the
school
Circuit
in
of
O'Fallon,
Success,
and,
a
and so
podcast
you're down in
dedicated to
Orlando,
helping
Florida.
you
I think the
achieve
weather's
success
probably a
in
little nicer
every
down there. It's
facet
about
of life.
20 degrees.
Only on the lineupmedia.fm
20 degrees
podcast
of snow.
network.
That's not going on in
Now,
Orlando, is
your
it?
host,
I think it's around
Brett
80 degrees
Gilliland.
outside.
Yeah, very nice. Very nice.
Got the short sleeve shirt on.
There you go. Well, you are the CEO and CIO of Off the Chain Capital, which is a great company that we'll talk about along this podcast here today. But we're going to talk a lot about cryptocurrencies and Bitcoin and all those things. And obviously, you'd have to probably be living in a cave without technology to have not at least heard of Bitcoin and cryptocurrencies and the blockchain and all those things. But today, if you could maybe give us a little background of kind of what's made you the man you are today, but also how you got into this specialty of what you do now.
Mm-hmm. Well, you mentioned I lived in O'Fallon, so moved there when I was in sixth grade. My dad was at Scott Air Force Base.
Yeah.
So from sixth grade to high school, graduated from O'Fallon High School in '86. Got a scholarship to play wheelchair basketball at University of Illinois. So I went to University of Illinois 4 years there, majored in economics and finance. I did my study abroad at Cambridge University and London School of Economics in 1988. And then I graduated in 1990 and started off as a stockbroker with a company called A.G. Edwards & Sons in St. Louis. So retail stockbroker. Did that for a couple of years, then moved over to the institutional side. And I was an institutional equity broker for 14 years with A.G. Edwards. Left there in 2004, met Brad, and around that time, I decided to leave A.G. Edwards and do my own thing. And so I took my top 100 clients with me, and most of my assets were like endowments and foundations I was managing money for. Did that for another 10 years. And then in 2014, I learned about this weird thing called Bitcoin. And coming from traditional finance, I thought it was a total scam when I first learned about it. I saw Cameron and Tyler Winklevoss on CNBC talking about it when it was $100 per Bitcoin. So Cameron and Tyler were on CNBC. Bitcoin is 100. I thought it was a scam, like some sort of pump and dump scheme. But I found a little curiosity around it. And so I put it on my watch list, and I watched it go from $100 to $400 to $800 to $1,200. And then it crashed from $1,200 down to around $350 when the largest custodian of Bitcoin got hacked in 2014. And someone stole like 850,000 Bitcoin. And so after it crashed, I've always been a value investor. And I decided to take a look and see what this was about. And so see if the suckers got washed out, and there might be some value opportunity there. And after I read the Satoshi Nakamoto white paper, which is the 9-page origin of the Bitcoin thesis, like I understood what this was. I understood that we're going to rebuild our entire financial system on blockchain technology. And I talked my wife into allowing me to sell my practice. And I exited the industry and started building blockchain companies back in 2014 and 15. So that's kind of how I got started.
So let's talk about that if you can. Just high level, what is cryptocurrency? And then what is the blockchain? Let's start at the very, very beginning if we can.
Okay, so they're the same. So when people say like Bitcoin is a cryptocurrency, it's cryptographic software. So that the first part of that is right, but it's not currency. So Bitcoin is more, the IRS says it's property. So, so you can't really, if you have a property, it's hard to spend. You can't go to Starbucks and spend your house or your land
right.
or your Apple stock, right? So the IRS says Bitcoin's property. So whenever you have a transaction in Bitcoin, you have to fill out a Schedule D and file your taxes with that transaction on it. So it prohibits, in the United States, it's prohibitive to use Bitcoin as currency. If you go outside the US into Europe and most of Asia, Bitcoin is currency. It's not classified as property. So a lot of people use it as currency outside the US. But in the US, it's property. And so, we really don't use it as currency. Other agencies call it something different too, like the CFTC calls it a commodity. FinCEN's, the Financial Enforcement Crime Network, calls it currency. Or they said it acts like currency. They actually don't, it's kind of funny. They don't say it's currency, they said it acts like currency. So they're very like getting close to the line there of calling it currency. And different government agencies call it different things. So anyways, back to your question, difference between cryptocurrency and blockchain. They're basically the same thing. Blockchain is the technology that powers these networks like Bitcoin and Ethereum and the 7,000 other I call them digital assets that are out there. I think that's a better way to describe them rather than cryptocurrency. So blockchain is the technology powering this software, and what that software creates are digital assets like Bitcoin and the other 7,000 other digital assets that are out there.
So Brian, I've heard you describe Bitcoin as a network. Can you describe that and how you think about that? I know there are different networks that we use every day, like, the internet's a network. Our email systems are network systems. So domain names, I know I've heard you talk about that in the past, how there are a limited number of domain names. And so that's somewhat of a network. And really, like Facebook's a network.
Yeah.
It has no value if nobody else uses it. But if everybody uses Facebook, now it has value. So
right.
Can you kind of explain your theory there with Bitcoin and how that's a network and the network effect and how you view that long term?
Yeah. So let's go back like 10,000 years. Like one of the first networks that we used was like gold and silver. So the world, we as humans decided collectively that we'll use gold and silver as our money, and we did that for like 10,000 years. And so that was that was a network. We all agreed that gold and silver that was interchangeable with goods. And then when technology came around, like you mentioned, like the internet, we can look at what's called HTTP. So when you go on the internet and you see your URL up there, you see HTTP. What that is, that's hypertext transfer protocol. That's the internet. That's the World Wide Web. When you send an email, you're using what's called SMTP, Simple Mail Transfer Protocol. Both of those are open source internet protocol software. So it's open source. Anybody could develop on it, and it's internet protocol software so that you could do peer-to-peer transactions, or I can go to your website without permission. I don't need someone to say it's okay to go to your website. I can just go to your website. And so, but with money, when we built the internet 30 years ago, we couldn't figure out how to create the software to send our money through the internet. And so what happened was that 30 years ago, we built the money transfer system on the internet. We built it on top of the banking and credit card system, but it wasn't supposed to be like that. The internet's supposed to be permissionless. Like I could just send you money if I want to, but it's not. If I want to send you money, before blockchain was invented, I had to go through PayPal, Venmo, Visa, MasterCard, Bank of America, some sort of clearing company to clear that transaction for us. And so I need permission. I need permission to have that bank account. I need permission to have a PayPal account. But it's not supposed to be like that. When we send data through the internet, when I go to your website, it should be peer-to-peer without permission. And so no one could figure out how to create that software until 2009. And that's when blockchain, or Bitcoin, the first blockchain was Bitcoin. That's when that technology was given to the world. Some anonymous person figured out that software and posted it on the internet and said, here's the solution everybody's been looking for. And so that's how Bitcoin started. It started organically. There was no venture capital behind it, starting it. It wasn't started by a foundation or like some sort of, startup company, like IPO'd. It just grew organic. It was software. It's open source internet protocol software. That's what Bitcoin is. It's, anyone could develop on it, and it's free to use. And, so it's a network. It's just like the internet. It's just like email. Domain names have value because there's a scarce number of domain names on the internet. And so as more and more people use the internet, those scarce domain names become more valuable. And that's how you could think about Bitcoin. There's only 21 million Bitcoin that could ever be created. There's about 200 million people using it today. But in about 10 years, there's going to be 4 to 6 billion people using it. And when more people use this network, this software, this open source internet protocol software, as more and more people use it, it becomes more valuable. And that's how you measure the value. You use what's called Metcalfe's law, or Metcalfe's law is the way you value networks. And so does that answer your question? Is that what?
Yeah. And so, one of the things Brett and I were talking about before we got on the podcast was your use of the S-curve analysis. And so does that network effect play into that S-curve analysis where really I think Bitcoin's adoption is at 25% today? I'm not sure where it stands, but can you explain to our listeners the S-curve adoption and how you use that? Because I think that's what you're using. When I met you in 2004, you were heavily invested in the internet stocks, eBay, Yahoo. I don't know if Facebook was around yet, Amazon. And so, you were using, I think, that same S-curve adoption thesis to invest in those early stage companies, knowing that they were probably going to have rapid adoption and obviously have higher valuations. So I went back and looked. I couldn't believe it had been 2004 since we worked together. Time flies. But Amazon was trading at $50 a share back then, and now it's at 3,000. So you've been very early to identify some of these trends, and hopefully Bitcoin is obviously the next one that's still not done growing. But yeah, the S-curve adoption, if you could just explain that real quickly, so the folks that don't know about it could learn more.
Yeah, so I learned this when I was at Cambridge University, like back in '88. We were studying like history of stock market bubbles. So Sir Isaac Newton was a professor at Cambridge. A guy who invented, discovered gravity.
Yeah.
He also managed the Cambridge Endowment back in the 1700s too. And so, anyways, during this class, we learned about S-curve. So what an S-curve is, it's the way you measure the adoption of new technologies. And so I've been using this, like Brad, like you said, throughout my whole career. So even before we met, I was using it in the early 1990s to identify computer stocks, like computer companies. So when I graduated from college in 1990, only 10% of US households had a personal computer. And by 2000, 10 years later, it was 90%. But if you look at when the PC was invented, it was invented like 1977 by Apple, but it was really like 1980 before like 0.1% of US households had a computer. So it took 10 years from 1980 to 1990 to go from 0% adoption to 10% adoption. But then it only took 10 more years to go from 10% to 90% adoption. So that's what S-curve is. You're looking for that apex of when it goes from 10% to 90%. And so if we look at Bitcoin, Bitcoin was invented in 2009. By 2019, 10% of US household had owned Bitcoin. In 2020, the comptroller of the US currency, Brian Brooks, said it was 15%. Last year, we did a study, there was a study released of 30,330 households. And that study showed that 25% of US households owned Bitcoin last year. And if you project this out, it shows that by 2029, so in 7 more years, 90% of US households will own Bitcoin or have exposure to blockchain, digital currency, these types of digital assets. And so we have 7 years of this mega trend mass adoption left. And it's still early. A lot of people keep thinking, like, I missed it. Bitcoin went from 100 to 40,000. I missed it. You haven't missed it. Our models, we have models that help us figure out what Bitcoin's worth in the future. Our models are showing that Bitcoin's going to be worth somewhere between $10 million of Bitcoin and $18 million of Bitcoin in year 2029 to year 2030. And these models are 95 to 99% correlated to the historical price of Bitcoin over the past 12 years. These aren't like models like we're pulling out of our butt. I mean, these are highly correlated models that have, been, correct over the past 12 years. And the models are telling us it's going to be worth a lot more in the future. The biggest question is like, I don't think the question is like, will Bitcoin be $10 million? The models say it's going to be worth 10 million. The biggest question is, what will $10 million buy you in 7 years? Like a house that's in O'Fallon today that costs like $350,000, will that be worth $3.5 million in 7 years, or $35 million? Like that's the biggest question. What will $10 million buy you? And that's what Bitcoin's use case is. It's a store of value to protect your portfolio against the government debasing the currency. And the government's actively debasing the currency. The Federal Reserve issued out 40% more US dollars over the past 2 years than it had before. And so the value of our dollar went down by 40%. And so that's what's called inflation. You have more dollars chasing same or fewer goods, so the price goes up. That's why your home price is going up. If you ask yourself, like, did your home get 20% bigger or 40%? If your home price went up 30%, let's say, over the past couple of years, did your home get 30% bigger? Like, nope. Did your lot get 30% bigger? Is your home providing 30% more utility than it did 2 years ago? And the answer is no. The reason it went up in value because it takes more depreciated dollars to buy that same asset. And that's why, it looks like your home value went up, but it really didn't. A home is equal to a home. What changed was the value of the dollar. And the only way to protect yourself is to own hard assets like that. You own real estate, rare art, and you own Bitcoin as a protection against that debasement of the currency.
So walk us through, if you can. So I love all that stuff. I appreciate you sharing that. But the head scratcher, I think, for a lot of people out there is this anonymous person, right, that created this, and we're done at 21 million Bitcoin. Like, how do you, like, that? For me, it's even a head scratcher, right? Of like, how do you justify that? I mean, the dollar, yeah, you've got the Federal Reserve and whether people think about that, but what's your answer to that when you think about an anonymous person creating this?
Yeah, so like I said, the person that figured out this solution to what's called the double spend problem, which was a computer science problem for 30 years. Like, people couldn't figure out how to send value through the internet without being able to copy and paste it and double spend it. Like, if I sent you, Brett, $1, I shouldn't be able to copy and paste that dollar and send it to Brad, right? That's double spending the same dollar. Right. And so with data, it's fine. I could send you a Word document, I could copy and send it to Brad, and it really doesn't matter. But we can't do that with money. So that was the computer science problem that no one could figure out. So most people have heard of Elon Musk. Elon Musk and Peter Thiel, a guy named Luke Nozick, they started a company called PayPal back in 1998. PayPal's original mission in 1998 was to create Bitcoin. They wanted to create this software that allowed transfer of value through the internet, this currency that wasn't debased. The governments and the banks couldn't debase the currency. They worked on that for about a year. They couldn't figure out how to do it either. And so they, switched PayPal's mission and they put it on the US dollar. And then I went to college with a guy named Mark Andreessen, back in the 80s. So Mark, when he graduated from U of I was 2 years older, but when he graduated, he took a piece of software that he developed as a grad student called Mosaic. And Mosaic is what he used to start Netscape. Netscape was the first internet browser back in the early 90s. And so Mark and his team tried to develop that software that allowed the transfer of value through the internet. They couldn't figure it out either. And so, like I said, what ended up happening was that we built the internet on top of the existing banking system and the existing credit card system. So it was built incorrectly. So whoever it was who figured out this solution, and the person or the group of people, they go by the name Satoshi Nakamoto, they figured out how to do this and they just gave it to us. They didn't sell it to the world. They just said, here's the solution. We're giving this solution to the world. They went on the internet, they posted it on the internet for free and gave the solution to the world. And this was in 2009 when the financial system was about to collapse. And what Bitcoin is, what this blockchain technology is, it's the peer-to-peer cashless payment system. And that's all it is. It's just software.
Are you like me? You just want to meet these people though? Like, I just don't understand in today's world how they don't say like, hey, I'm the one that did this. That was amazing.
Yeah, well, if they did, then the government would go after them.
Okay.
So,
yeah.
So if you look at previous attempts at creating an alternative money system, people who do that get arrested. So, there's a whole history of people trying like e-gold and other ways to issue out currency. And so the government doesn't like that, and they go in and they crack down on these people, and those are centralized platforms. So Bitcoin cannot be stopped. It's a decentralized platform. All it is software. It's software running computer code. Anybody could use it. And in the United States, computer code is protected language. Back in 1996, the Supreme Court decided that computer code is protected by the First Amendment of the United States on free speech. Computer code is speech, and it's protected speech. And so anyone could issue out computer code, and the United States can't stop it. Like it's against the U.S. Constitution to shut down Bitcoin. So what they've been doing is trying to slow it down. So they tax it as property, which they're allowed to do. They're on a massive misinformation campaign to brand it as something nefarious or something that's not environmentally friendly, which is all completely false. And so they're trying to convince people not to use it. But as the world understands what this is, more and more people are starting to use it as, basically insurance to protect them against the debasement of the currency.
Yeah, I think it was interesting. I think in the past few weeks, we've seen that ConocoPhillips is going to use some of their excess capacity to, sell that capacity to miners, Bitcoin miners. And then Ameren, I think, is using some of their coal mining capacity to mine Bitcoin. So you're starting to see some of these energy companies use excess capacity that would have gone to waste. Their energy would have, not been efficiently transferred to the grid. They're using this to mine Bitcoin. And so, you're seeing more and more companies develop environmentally friendly ways to mine Bitcoin, because really, correct me if I'm wrong, Brian, but the biggest cost of these mining companies is energy and the cost of energy. So they'll go to the most efficient places in the world to mine Bitcoin. And so in that sense, they're trying to find more energy efficient ways to mine Bitcoin. So, I think there's a lot of success and companies are really trying to find solar, wind areas in Texas where that energy can be created, but it can't be transmitted across the world. So using Bitcoin mining in those areas is really kind of an efficient way to mine this Bitcoin.
You're 100% right. I mean, so it pushes the Bitcoin mining industry. 53% of the energy use comes from green or renewable energy sources. It's the most ESG friendly industry in the world. So when people say Bitcoin hurts the environment, they don't know what they're talking about. It's the greenest energy, in the world, industry in the world. Just to drill down a little bit on your point that Bitcoin mining tends to go towards the cheapest source of electricity. That's why a lot of Bitcoin miners used to be in China. So China, over the last 30 years, built a lot of hydroelectric dams in remote areas. And so you have all this electricity being generated from the dam, but there's not enough population in these remote areas to use up that electricity. And you can't transmit it more than 500 miles because you lose 60% of the electricity during the transmission. And so it's stranded electricity just sitting there being unused. And so the Bitcoin mining industry went to these hydroelectric plants in remote China and said, hey, we'll pay you 1 cent per kilowatt hour. And that's better than zero, letting it go to waste. So they were getting very, very cheap electricity. So what ended up happening is that over 50% of the Bitcoin mining was being done in China until last year. And then China said, we're kicking all the miners out. And all those miners had moved, now have moved out of China. And less than 1% of Bitcoin's being mined in China today. And a lot of that came to the US. The US is the largest Bitcoin mining country in the world today at 35%. So 35% of the creation of Bitcoin or the clearing of transactions. So I just want to make sure people understand what Bitcoin mining is. If you're a miner, what you're doing is you're volunteering to go buy computer equipment, pay the electrical cost to clear transactions on the Bitcoin network. You do it for free. And the reason you're doing that is because the Bitcoin network spits off 900 Bitcoin a day, at a rate of 6.25 Bitcoin every 10 minutes. So that's like $36 million worth of Bitcoin that's being rewarded out to the people clearing those transactions. And if you're clearing those transactions, you participate in that reward system. So you could earn Bitcoin by clearing these transactions. And so that's all a Bitcoin miner is. And a third of that today is in the United States.
So looking at that, it's like a miner back in the day going mining for gold, right? They got a job, they got paid to go do it. Now these people are volunteering to do it, but on the backside, they're getting rewards by actually having their own Bitcoin shaved off, if you will, looking at it like gold, right? Shaved off. I get to keep some, the rest goes out into the world.
No, it's not shaved off. It's newly created Bitcoin. So the way the software works is that, let's go back to 2009 when Bitcoin first started. So the Genesis block, before there was any Bitcoin out there, it issued out 50 Bitcoin every 10 minutes. And so for the first, and it's measured by the number of blocks. So it's every 210,000 blocks of data or Bitcoin that gets generated, then it gets cut in half. So for the first 210,000 blocks, and it takes about 10 minutes to create a block. So 210,000 times 10 minutes is about 4 years. So approximately every 4 years, the reward gets cut in half. So for the first, 210,000 blocks, it was 50 Bitcoin every 10 minutes. And then in 2012, that got cut to 25 Bitcoin every 10 minutes. And then in 2016, it got cut in half again to 12.5 Bitcoin every 10 minutes. And then in May of 2020, it got cut in half to 6.25 Bitcoin every 10 minutes. And then in 2024, it's going to get cut in half again to 3.125 Bitcoin every 10 minutes. So those are halvings. There's going to be the computer software says that there's going to be 32 halvings during the life cycle of Bitcoin. We've had 3 halvings. And so you have 29 more to go. It's going to take 120 years to do the next 29 halvings. And so there's been 19 million of the 21 million maximum Bitcoin that have already been issued out. So 90% of all the Bitcoin that can be created has already been created. And it's going to take 120 years to create that last 10%. And so, in my opinion, there's going to be a scramble because people are going to realize that this is the new monetary layer of the world and that there's only 2 million more Bitcoin that's going to be rewarded out. We better buy up some of the Bitcoin that's already been issued out And then that's what caused the price to go up.
So Brian, what do you think is the biggest risk to Bitcoin? So, we talked about China regulating miners. If it becomes seen as a currency, as a world currency, I'm sure you're going to see some countries that don't like that competition with their local currency. So what, in your opinion, what is the biggest risk for this not to play out the way you're thinking it's going to play out? Is it regulation by governments? Is it a different cryptocurrency that people think is better than Bitcoin, a different software? What do you think could derail kind of your thought process for Bitcoin?
So let's talk about like what you just brought up. Could something replace Bitcoin? So there's two types of blockchains that are out there. There's proof of work blockchains like Bitcoin, and other proof of work blockchains are like all the hard forks that came off Bitcoin, like Bitcoin SV, Bitcoin Diamond, Bitcoin Gold. These are competitors against Bitcoin. Someone said, thought I could create a better version of Bitcoin by increasing the block size, make it faster. But those have pretty much failed. They're better technology, but nobody's using them. And then there's other proof of work blockchains like, Litecoin, Monero, Zcash, Dogecoin. A lot of people own Dogecoin. But those are proof of work blockchains. If you add up the value of all the proof of work blockchains, like I just mentioned, 92% of the value of all the proof of work blockchains is in Bitcoin. So the world has already decided that Bitcoin's the winner for proof of work or store of value on the internet. So, that's already been decided. There's no more question that, you're not, Bitcoin won't lose 92% of its dominance. In fact, its dominance keeps increasing, and eventually it'll be 99% of proof of work blockchains will be, in Bitcoin. The value will be in Bitcoin. So all the other blockchains that are out there are called proof of stake blockchains. So that's like Ethereum 2.0, Solana, EOS, Cardano. Those are basically operating systems using blockchain technology. And so those operating systems, they're duking it out. They're fighting it out, trying to figure out which one's best. And it's too early to know. There are 7,000 of those out there, and we just don't know which one's going to be the winner yet. There'll be a shakeout phase when, in the next few years, and 99.9% of those are going to zero. And there'll be a handful that will be left, and we'll have Bitcoin, and we'll have a handful of dominant blockchain operating systems. And so to answer your question, Bitcoin already won its category. It can't be replaced. But all the other ones are still fighting it out. Another threat to Bitcoin could be, like, just say the US government says, we don't want Bitcoin in the United States anymore. There's a few things preventing that from happening. One is the Supreme Court. It's already decided that Bitcoin's code and it's protected speech. Another thing is that there are 89 million millennials in the United States. So these are people who are 35 or younger. It's a huge voting bloc. 70% of them own Bitcoin. So if you're a politician and you're going to go against the millennials, you should probably good luck with that, right? It's the new voting bloc. The baby boomers, which was the previous largest generation, they're 47 million strong. So, and they're dying off. The new voting bloc are the millennials. So the politicians won't want to go against them. And so the politicians are recognizing that, blockchain is a voting, way to get votes. And so they're not going against it. But if the US government says, hey, we want to eliminate the use of Bitcoin, the one thing they could do is just tax it at 100%. Right now it's taxes capital gains, just like a stock is. But if they want to take all the economic incentive out of the system to use this, they would tax it at 100%. And then no one would want to use it because there's no gain in it for them. The reason the government won't do that is because the blockchain assets are worth about $3 trillion today. and they have a cost basis of a couple $100 billion. So there's like, $2.8 billion worth of unrealized capital, or excuse me, $2.8 trillion worth of unrealized capital gains that are out there. And, as people, shift the money around, sell it, use it, spend it, it's going to trigger some of those capital gains. And so there's hundreds of billions, if not trillions of dollars of future tax revenue that could flow to the US government by letting the system flourish. And so the US government has no incentive to destroy that. So I don't really see any huge risk to Bitcoin and to blockchain in the United States.
Brett and I have discussions as financial advisors with baby boomers. And so it's kind of funny to try to explain Bitcoin to them and have them just get this puzzled look on their face. Like, okay, so it's money that's mined in cyberspace. We don't know who created it, all these things that they come up with. And so we have to try to explain, the things you're explaining to us in layman's terms. So it's always challenging and fun to do that. One of the things that I think I've had the most pushback on was that this can get hacked and people can just take your Bitcoin.
Yep.
And so I think you were, Brian, alluding to the Mt. Gox hack years ago that kind of happened and you were able to get some Bitcoin cheaper. I think there was a story last week about some folks that scammed some people out of millions of dollars of Bitcoin. But can you kind of walk us through that? Because it seems to me that those hacks, for the most part these days, are people being careless with passwords. They're clicking on links they shouldn't click on. They're being careless with their security. It's not necessarily the hacking of a custodian or where the Bitcoin is stored. So can you kind of walk us through that and maybe give our listeners a little peace of mind that the system itself is not being hacked. It's another layer that's being hacked.
Right. So from day one, when the Bitcoin blockchain started, it's been up and running 99.99% of the time. So it's more reliable than the Fedwire system. Okay. And the Bitcoin blockchain network has never been hacked. Okay. So what gets hacked are the custodians, people that custody Bitcoin. So if you think about it, it's like the bank got robbed. But the Federal Reserve still has the printing press. So exchanges, custodians of Bitcoin, if you're self-custodying your own Bitcoin, you could, mismanage it and, lose it. But the Bitcoin network itself has never been hacked. And the reason is that it's protected using cryptographic software. So to be specific, it's using SHA-256 cryptography. This is military grade cryptography, and it's non-hackable. If someone's able to hack that, there's almost $1 trillion worth of value in Bitcoin that people could steal. And the fact that no one could steal it is proof that it's not hackable. And if anyone ever comes close to breaking the cryptographic codes that protects the network, then the developers will just notch up the cryptography from SHA-256 to SHA-512. And then they'll notch it up to SHA-1024. And you keep increasing the difficulty or the cryptography to such a point that there's not enough electricity in the world to break the code. And if you turn it up high enough, there's not enough electrons in the universe to break the code. And so it's unhackable, it's unbreakable. And people say that, there'll be, quantum computers or some other computing network out there that could break the code. And if they could break it, they would have already broken it. And the fact that it hasn't been broken is proof that they can't break it. And if they ever come close to breaking that cryptography code, they'll just keep notching up the cryptographic software to make it more and more secure.
I think I heard Michael Saylor, who's the CEO of MicroStrategy, who's invested his corporate cash, much of it in Bitcoin, but I think he said that it would take 3 to 4 years to possibly hack, and it would cost billions of dollars to do that. And so he said, why wouldn't you, if you're going to spend 3 or 4 years and billions of dollars to hack to get into Bitcoin, why not just buy Bitcoin? Take your $3 or $4 billion and buy Bitcoin today. So, but yeah, that's a question that I know folks have asked me, just the security of it. So thanks for.
So let's talk about MicroStrategy for a little bit, Michael Saylor. So I know Michael. I was just at his house like last month for dinner. It was just me, him, and a couple other friends. And he's a great guy, super smart, MIT grad. He was one of those guys back in the early 90s that was buying up domain names. He bought up Mike.com, Michael.com, Hope.com, Wish.com, Voice.com, like all these easy, domain names. He bought Voice.com for like $25 back in the early 90s. He sold it about 6 months ago for $30 million.
Jeez.
Okay. And yeah, he asked him, like, why would that domain name go from $25 to $30 million? It's because there were only a couple 100 million people using the internet 30 years ago. And now there's billions of people. So it's worth more. That's why Bitcoin will be worth more in the future. There's like 200 million people using Bitcoin today. In the future, there's going to be billions of people using this, and Bitcoin's going to be worth more in the future. And so what Michael did, he had that experience. He was like, well, I know how digital assets appreciate over time that are scarce resources on the internet. When he learned about Bitcoin, like it was just been 18 months ago, he decided to take the $500 million of cash on his company's balance sheet and invest that in Bitcoin. And then he went out and issued a convertible preferred and bought like $1 billion more. And then he bought another $1 billion. He's bought like $3 billion worth of Bitcoin on his company. When he started doing this, the total market cap of his company was $1 billion. And now his market cap about 18 months later is worth about $7 billion. So, he turned $1 billion into $7 billion in less than a year by buying Bitcoin on his balance sheet. Currently today, they own about 125,000 Bitcoin on their balance sheet. And what they're going to do with that, eventually, he's talked about this on his calls. So this isn't like inside information or anything, but on his calls, he's talked about how they're looking into loaning or leveraging that Bitcoin up. And so his operating company today generates about $100 million worth of free cash flow. If they loan that Bitcoin out, they could generate another $300 million worth of free cash flow. So all of a sudden, this company, instead of generating $100 million, is generating $400 million of free cash flow. And then what's he going to do with that? Well, he could buy back his own stock. He could buy more Bitcoin with it. He could issue out more convertibles and buy even more Bitcoin.
He's a smart guy. I've probably got about 1,000 hours myself of just research and listening in regards to Bitcoin. And I'd say Michael Saylor has probably been the person I've listened to the most. So he'll do some podcasts or talks where he speaks for 3 hours. And I don't know how he even knows some of the things he knows about ancient Roman history and the history of money and ports and things. He just is I don't know how he, memorizes all these facts and details, but he's amazing to listen to. And he's been one that I've leaned on for information and just following his strategy with MicroStrategy. I think he said that he was into the internet stocks very early. And I think he even wrote a book that didn't sell very well. And so he said this time when he found Bitcoin, he wanted to share it with more people, his employees, and with, and really get the word out. So I think, he's been able to identify some of these trends too. And he's all in on it. So it'll be interesting to see how that plays out.
What's dinner like over there? Let's talk about that. I mean, we're hanging out. Maybe we'll do that this Friday, Brad. We'll hang out with all of our billionaire friends.
I'm supposed to go to Michael's house on Saturday.
What's dinner like over there, man?
Yeah, so he has a home in Miami. I think built in 1924. Very unique house. It's pretty much original. He has a 100-foot yacht parked in the backyard. So it's a little crazy.
A little different than O'Fallon, Illinois.
Yeah, a little bit. Yeah. But he's a super nice guy, very generous with his time. Like Brad said, one of the smartest people I've ever met. And he experienced this over the last 30 years. He experienced how digital assets go up in value over time as more and more people use them. We don't have to overthink this. More and more people are going to be using Bitcoin in the future than they are today. And as more and more people use it, it's going to become more valuable. Okay. And so it may not be 10 million, it could be 20 million, or it could be 1 million. I mean, no one really knows 100% for sure, but it's going to be worth more than it is today when you have billions of people using this. And so that's the general thesis. You buy it as like digital real estate, and you hold it for the next 10 or 20 years, and then you open it up and say, how'd it do? And I'm pretty confident it's going to be worth more than it is today.
Yeah. And so right now you look at it as obviously it's protection. And so there's also the payment method, if you will. I'm using air quotes here, but what other functions are there for crypto, specifically Bitcoin?
Yeah. So let's look at what the Federal Reserve says. So in St. Louis, there's a Federal Reserve Bank.
Yep.
Back in January of 2018, the Federal Reserve Bank of St. Louis put out a white paper on Bitcoin. And what they said 4 years ago is that Bitcoin's best use case is as a diversification tool for investment portfolios. And they said that because it's a non-correlated asset. And so I just want to make people, they're hearing me correctly. Yeah. I'm saying it's non-correlated. I'm not saying it's negatively correlated. A negatively correlated asset would be like if the stock market went down, Bitcoin would go up. Okay, I'm not saying it's negatively correlated. I'm saying it's not correlated. So that means if the stock market goes down, Bitcoin goes up, but sometimes the stock market goes down and Bitcoin goes down too. There's just no rhyme or reason to Bitcoin's movement compared to the stock market. So that makes it non-correlated. And when you add non-correlated assets to a diversified investment portfolio, it increases what's called the Sharpe ratio, or the risk-adjusted returns on a portfolio. And that's why fiduciaries, asset managers, endowments, foundations, universities, they're all, not all, a lot of them are investing in Bitcoin today because it reduces the risk, it increases the Sharpe ratio on their investment portfolio. And if you're a fiduciary and the Federal Reserve is telling you that Bitcoin's a non-correlated asset, then you probably should pay attention to that and consider getting off zero. Having a 0% allocation to Bitcoin is the wrong number. It has to be something above zero. And so it's, you and your financial advisor need to figure out, is it 1%? Is it 2%? Is it 10%? You have to figure out what that number is, but it's definitely not zero.
Brian, we spoke, I think January of 2021 was when I caught back up with you. I saw Brian on I think it was a podcast or a interview with Real Vision TV. And so we had a discussion January of 2021, and you said that most financial advisors couldn't invest in Bitcoin, that some of the products that we can buy at TD Ameritrade, Schwab, Fidelity, one of the custodians, that a lot of financial advisors just couldn't buy those. Has that changed in the past year and a half or so?
It's starting to change. So more and more financial advisors are, allowing their clients to invest in Bitcoin. And the reason the ones that haven't allowed it yet is that they don't want to get sued, right? So Bitcoin is very volatile. Last year it went down 50% twice. It's normal for it to swing 30 to 50% in a short period of time.
Well, where can our listeners find more of you, Brian? Website, social media, where do you want to send people to?
Yeah, if you want to follow me on Twitter, it's Brian Estes 32 is my Twitter handle. If you want to go to our website, it's offthechain.capital. And then we have a Bitcoin University on there too. So you'll see a tab on there. It says Bitcoin U. We link a lot of really good resources there. If you want to, help, educate yourself about Bitcoin and why we think this is it's going to be the next monetary layer of the world.
Awesome. Well, we'll put that all in the show notes, Brian. It's been awesome having you. And I know Brad, appreciate the introduction.
Yeah,
and
thank you
the
for
education.
Thanks for joining us, Brian.
Thank you for having me. I appreciate it.
Been very, very helpful, educational. Hopefully our listeners get a lot of value from it. I know I certainly did.
Yeah, absolutely. Thanks a lot, Brian.
Thank you.
All right. Enjoy the warm weather.
Tune in next week for another episode of The Circuit of Success with Brett Gilliland on the lineupmedia.fm podcast network. Subscribe to the show on iTunes, Google Play, Stitcher, and through our website, circuitofsuccess.com. Follow us on Facebook and Twitter, and email any questions to info@circuitofsuccess.com. The information provided in this communication is for general information only and should not be construed as personal investment, legal, or tax advice. The information has been obtained from sources deemed reliable, but as additional information, guidance from governmental agencies, or new legislation is passed, it could become outdated. Prior to taking any action, please consult your financial advisor, attorney, or tax professional for personalized, updated advice. This recording is in no way a solicitation or offer to sell securities or investment advisory services. The views expressed in this podcast are those of the interviewee and not those of Visionary Wealth Advisors. Participants in the podcast may own, individually, Bitcoin or Bitcoin-related investments. The information or opinions expressed in this podcast alone are not enough to support an investment decision. Please contact your investment advisor for individual investment advice. Investing involves risk, including the loss of principal. Visionary Wealth Advisors is an SEC-registered investment advisor. For information about Visionary's registration status and business operations, please consult the firm's Form ADV disclosure documents. The most recent version is available on the SEC's IAPD website at www.advisorinfo.sec.gov.
This podcast was a presentation of lineupmedia.fm.